Good morning, Story Trading. It's March 13th, Monday morning, and this is where you come to understand markets, right? That's always been the promise of Story Trading, is that there's a reason for all the price action. We prove that over and over and over again, and I take solace in the fact that sometimes when we're not making good money, we're still doing a great job explaining and understanding markets. The last week, obviously, has been tough, but we prove over and over and over again that the movements you see in the stock market are not random. They make sense. Okay, there's logical, identifiable reasons why stocks move up and down, and we're identifying them all the time through great collaborative research. Okay, I have on my other screen, Biden is going to talk soon. So as soon as he comes on, we're going to flip to that. But all right, a couple things to cover here. First of all, man, did we ever kill it with TLT Gold was the call I've been making all weekend. So that's the way to play this. So I bought TLT Gold right at 7 a.m. And that's working out great. But man, bigger picture, a lot to cover. Oh my gosh, where do we start? Wait a second. Here comes Biden running to the podium. So let's cover that first.
Signature Bank. Today, thanks to the quick action of my administration over the past few days, Americans can have confidence that the banking system is safe. Your deposits will be there when you need them. Small businesses across the country, the deposit accounts at these banks can breathe easier knowing they'll be able to pay their workers and pay their bills. And their hardworking employees can breathe easier as well. Last week, when we learned of the problems of the banks, and the impact they could have on jobs of small businesses and banking system overall, I instructed my team to act quickly to protect these interests. They've done that. On Friday, the government regulator in charge, the FDIC, took control of Silicon Valley Bank's assets. And over the weekend, it took control of Signature Bank's assets. Treasury Secretary Yellen and a team of banking regulators have taken action, immediate action. And here are the highlights. First, all customers who had deposits in these banks can rest assured, they'll be protected and they'll have access to their money as of today. That includes small businesses across the country that bank there and need to make payroll, pay their bills, and stay open for business. No losses will be, and this is an important point, no losses will be borne by the taxpayers. Let me repeat that. No losses will be borne by the taxpayers. Instead, the money will come from the fees that banks pay into the deposit insurance fund. Because of the actions that our regulators have already taken, every American should feel confident that their deposits will be there if and when they need them. Second, the management of these banks will be fired. If the bank is taken over by FDIC, the people running the bank should not work there anymore. Third, investors in the banks will not be protected. They knowingly took a risk, and when the risk didn't pay off, investors lose their money. That's how capitalism works. And fourth, there are important questions of how these banks got into the circumstance in the first place. We must get the full accounting of what happened and why those responsible can be held accountable. In my administration, no one is above the law. And finally, we must reduce the risks of this happening again. During the Obama-Biden administration, we put in place tough requirements on banks like Silicon Valley Bank and Signature Bank, including the Dodd-Frank law to make sure that the crisis we saw in 2008 would not happen again. Unfortunately, the last administration rolled back some of these requirements. I'm going to ask Congress and the banking regulators to strengthen the rules for banks to make it less likely this kind of bank failure would happen again, and to protect American jobs and small businesses. Look, the bottom line is this. Americans can rest assured that our banking system is safe. Your deposits are safe. Let me also assure you, we will not stop at this. We'll do whatever is needed. On top of all this, let's also take a look at a moment to put the situation in a broader context. We've made strong economic progress in the past 2 years. We've created more than 12 million new jobs, more jobs in 2 years than any president has ever created in a single 4-year term. Unemployment is below 4% for 14 straight months. Take-home pay for workers is going up, especially for lower and middle-income workers. And we've seen record numbers of people apply to start new businesses, more than 10 million of them, more than 10 million applications over the last 2 years starting businesses. Now we need to keep this progress going. That's what swift action that my administration over the past few years is all about. Protecting depositors, protecting the banking system, protecting the economic gains we've made together for the American people. Thank you. God bless you. And may God protect our troops. See you in California.
Mr. President, what do you know right now?
TLT Gold is the way to go. It's the safest way to go. We're reviewing those charts, looking at the long term, the break of the 200 DMA, the 50-week moving average right on there on TLT. Gold, I think, is the better way to go, better than even TLT to go, because the Fed, if I was talking about, the Fed might not drop interest rates, but they certainly can't raise them aggressively now. And that's really good for gold in an inflationary environment. Wow. What else did we miss? Oh my gosh. We missed that banking stocks, FAZ, SKF, all these stocks, their equity is not going to be protected, right? They have to go to the discount window. They have to raise equity. That's why you see Schwab down, Bank of America. You see all these stocks down. Financial sector, not a great investment because of that. So this is very similar to 2009. What else did you miss? I talked about, again, going back, let's just do it one more time. We talked about the parallels between dot-com bust and 2009 financial crisis. Look, we're still above that 200 DMA, right? It's still a bull market. We only had a correction. This was the dot-com bust just correcting the big gains. Now we move into possible bear market because of recession. Now we move into financial crisis. It's the same thing, history repeating itself. Now, last time it was right after it. I can't believe I lost the mic. Okay, so anyway, TLT Gold, that's the way to go. Let's go to, again, specific stocks. I talked about PRVB, 270% premium. All I said was that is great for Drio sentiment-wise, but I also talked about microcaps like Drio, e-liquid stocks, very dangerous in this environment where people are looking to raise cash. Don't be surprised to see crazy dislocations in prices like and things like Drio and other microcaps. I mean, it could be a bloodbath out there as people seek to get cash and move it into things like bonds and gold. We did have a re-rating play on Zim. They beat by 14%. It's right there at 14%. I took a quick dollar trade on that, like in at 21 out of 22. I'm not willing to predict based on their 2023 guidance because their guidance was an adjusted EBITDA, and I have a hard time comparing that to the net income out there, the net income estimates that the analysts had a hard time predicting that. But Zim took the quick dollar based on the 14% beat. What else did I mention for you here? A little news on SRAD. Don't know what to make it. I'm not going to play it, but there was some news on ZYXI. Just want to let you know that they were late on that, right? ZYXI, they were late on reporting. They did report this morning, so you could see a pop in this. I'm not willing to say there was roughly in line. It was a mixed report. Their EPS was better than expected. The revenue came a little bit under expected. Their guidance for 2023 was also mixed, but very close to analyst guidance. So you could say, hey, it should go back to 1228, but slow down because you have two major events between here and here, right? You had not only that they filing late, but you also had the issue with the financial crisis. So maybe that's your peak here at $11. I'm not going to play this. Really, my focus is on gold and TLT and finding ways to get exposure to that. I did it in my IRA earlier this morning, but as far as trading vehicles, I think the way to trade is maybe selling puts on TLT Gold, maybe buying pullbacks on those. Same thing with FAZ and SKF. This very much feels like 2009 to me. And I just want to say what I was saying at the top when I did have my when I thought my audio was working is that, look, even when we're not making money, in the last week I haven't been, it's been tough, all right? We're explaining markets. And that's the whole point of story trading. Is the whole premise of story trading is markets make sense. And we've proven time and time again that these moves make sense, okay? By doing collaborative research. And also, I spent probably a dozen hours yesterday on Twitter Spaces. I spent a lot of time reading articles and all of that to be able to understand the price action that's happening this morning. And that, again, the whole premise of story trading. I hate it when people come say, oh, markets are illogical. You can't make sense of it. It's inefficient. It's chaotic. Not only do I think that's wrong, but I think it's dangerous to not go out and understand the price action, to say everyone else is stupid except me. Right? I think that's a very dangerous attitude. You have to understand the price action, go out and seek and and collaborate to understand what the bear thesis is doesn't mean you have to agree with the bear thesis, right? You can say, you know what? I understand the price action. I understand what the rest of the market is saying, but I'm going to speculate that in 6 months, in 1 year, in 3 months, the company I own will execute on certain things and will debunk the bear thesis. And that's investing, right? That is investing. It's speculating about the future based on the knowledge you have. Investing is not saying the market's stupid, I'm the only one who's smart, and everyone else is stupid. That is not investing. The market's inefficient. I'm looking for an opportunity based on inefficiency. I'm sorry, that is not investing. Investing is speculating about the future and understanding the current bear and bull thesis and trying to have an edge based on your analysis, right? We have an edge based on your analysis. So I think stock will do something in 3 months, in 6 months. We'll execute. We'll break the bear thesis. That's investing. We prove this day in, day out, every single day that price action makes sense. Okay, market makes sense. It's not chaotic. It's the aggregate net price action of all market opinions, and all market opinions count. Sentiment count, fundamentals count, catalyst count, and it all makes sense. And we're sitting here looking at losses. We haven't made money in the past week, but we understand what's going on. And by understanding what's going on, we can make better decisions going in the future. And for me, that better decision is TLT and gold, adding it to my IRA and having a bias towards trading TLT, gold, FAS, SKF in my trading account. Again, via short puts, via buying the dips, things like that. And we'll have to take it day by day. That's today. That's the today analysis, right? We have CPI tomorrow, which could turn everything on its head. We have PPI the next day, could turn everything on its head. We have the Fed decision next week, turns everything on its head. All right. But rest assured, the market reactions to all of these things every day can make a lot of logical sense. You just have to do the homework to make sense out of it. You have any questions? You don't understand why something is doing what it's doing? Let's talk about it. Put it in the chat room. We'll collaborate together. We'll discuss it. We'll analyze it. We'll go on Twitter. We'll find a reason of why it's doing what it's doing. And that can great about the analysis we've done since Friday. I mean, based on our analysis, made the correct decision to buy TLT and GLD right out of the gate, right? We said that's a better investment than QQQ SPY, better bet than QQQ SPY betting on the markets, even though the superficial assessment, again, is rates are lower. That's good for all assets. Not in this case. It's a little bit tricky because of the history of 2009. Because of the history of 2009, because of that memory, because possible recession, because of possible fallout of a banking crisis, right? Just because the Fed might pivot now doesn't mean that you have the all clear for stocks. But you do have a strong buy signal for especially gold and TLT. And that's the end of our show, guys. Keep the collaborating going. I'm sorry about that mute that we had earlier. Have a great day.